Hey everyone, sorry for that. So good morning, good afternoon, good evening. Welcome to CoinGecko's 26th virtual meetup. My name is Zhong. I'm the head of research here at CoinGecko, and I'll be your host for today for the meetup. So before we begin, I think just to give you a rundown of what's going to happen this month. So we've got a very interesting meetup this round. It's gonna have two parts. So I'm gonna start off, and I'm gonna quickly present a summary of our 2023 Q crypto industry report that you can already see on the screen. We published this report 2 days ago, and you can find a summary and a full report as well on coingecko.com/research. But nonetheless, I'm just gonna quickly give you a quick peek or a quick summary through what are some of what I think are the key points coming out from this report that we produced for this quarter. Followed by that, we're gonna go into a panel discussion, and I think it's going to be a very interesting one. We're gonna talk about Solana in 2023 and beyond, and that's going to be a panel discussion with three other distinguished guests from the Solana ecosystem. So without further ado, I think let's go quickly into the first section, which is a summary of the report. Like I said, I'm only going to do about 30 minutes, and then hopefully that gives you a flavor of sort of what has happened in the market and sort of the broad view of the market in 2023 Q2. Now, just before I begin, I just want to thank BitGate, who's the sponsor for our report. So thank you, BitGate, for supporting us and allowing us to produce this report. So let's get straight into it. So if we look at 2023 Q2, you'll see that actually the total market cap didn't change much from the start of the quarter. It's pretty much started where it began at 1.24 trillion US dollars, and it pretty much stayed flat from a total market cap perspective. I think what is perhaps more interesting and perhaps more alarming is that if we looked at the average daily trading volume, it has actually decreased by about 42.7% quarter on quarter. And we're gonna talk a bit about like why this has happened, why this has changed, from Q1 to Q2. But I think you can already see pretty clearly there was a massive fall off at the end of March, when several things sort of happened. But nonetheless, I think these are quite worrying signs, and it's a sign that liquidity is pretty much quite thin on the ground. Even though there were quite a lot of things that happened in Q2 that you thought would move liquidity significantly, right? I think within what we track as the top 30 coins on our website, you'll see that some coins have moved up and down. Interestingly, I think LTC and BCH, right, Litecoin and Bitcoin Cash, they actually had a good quarter, mainly because I think they were sort of listed on EDX markets, and sort of these sort of proof of work coins were sort of considered not to be securities by the SEC, whereas coins like Matic, you'll see Filecoin underneath there has actually lost their positions, or decrease in their position because they were named in the US SEC's lawsuit against Binance and Coinbase as allegedly securities, right? Other ones that move significantly is BUSD. I think no surprise there. We'll talk a bit about BUSD later. But as they continue to wind down, their position in the market continues to slip. But replacing them sort of is True USD that has all broken into the top 30, and ICP has entered the top 30. Yeah. The big gainer, I would say, I mean, if we put aside meme coins that again we'll talk about later, is Bitcoin, which actually gained by 6.9%, essentially 7%, right? And pretty much outperformed the market. You saw from the previous slide that market was pretty much flat, whereas Bitcoin was up by 7%, right? It saw a strong rally until sort of middle of April, and then sort of fell off. And then I think a lot of people were quite fearful at the start of June, right, when the US SEC essentially went after Binance and Coinbase. But suddenly there was a surprise announcement of BlackRock's spot Bitcoin ETF filing, and that actually sent the price moving upwards. In middle of June, and to sort of stay on top of $30,000, right? So It sort of stayed above there for a while now, but I think as of the last few days, it's sort of fallen below 30,000, just below 30,000. But yeah, I think sort of Bitcoin definitely had a strong Q2, right? And sort of outperform most people. It actually also outperformed Ethereum. Ethereum only gained by about 6% in 2023 Q2. So yeah, there's clearly some rotation back into Bitcoin and back into the majors, as you'll see in the next in the other slides. Obviously, the other thing that was interesting that has happened in Bitcoin that I think bears mentioning and shouldn't be underestimated is the impact of Bitcoin ordinals, right? So it started with NFTs, right, and then now we have BRC20 tokens as well on Bitcoin, which are alternative altcoins, I guess, on the Bitcoin network, and that has also driven some volume in terms of activity on Bitcoin. It's actually been pretty good for miners because they are getting more fees. So we actually see the Bitcoin hash rate continue to climb and actually hit another all-time high again in 2023 Q2. So these are, I would say, encouraging signs. I know ordinals is not universally approved or universally liked by the Bitcoin community, but I think what's undisputable is they have been contributing to gas fee and contributing to paying miners to make sure that the network remains secure. If we take Bitcoin's performance, as you saw earlier, like up 7%, and put it in context of all the other major asset classes that you would typically track in the capital market, you'll see that it's still the second best performing, the third best performing asset class. Sorry, the third best performing asset and the second best performing asset class. Behind U.S. equities. U.S. equities, the Nasdaq gained by 14%. And the S&P 500 gained by 8% within the same quarter itself. So it's been an extraordinary gain for them. I think for the Nasdaq and the S&P, pretty much their first half performance has been the best ever for like 40 years. But nonetheless, I think if you take Bitcoin's performance over the entirety of first half 2023, it's still a massive return, and it still outperforms the S&P and the Nasdaq. I mean, just looking at the chart on top on the right, you'll see that in Q1 it already gained by 72%. Other asset classes, I think to point out, crude oil, I think has sort of declined after in probably like the earlier part or middle part of 2022, where there was significant volatility and actually shot up because of the war in Russia, Ukraine, and things like that. But I mean, because of a confluence of factors, it's sort of moderated. So to be honest, quite a good sign. I mean, because it's been a driver of inflation in globally, and moderating crude oil price means that contributes to moderating inflation as well. Elsewhere, currencies like the Chinese yuan and the Japanese yen, sorry, both saw losses due to various factors. But the US dollar, I think, remained absolutely flat, earning 0%. So all in all, I think good showing from Bitcoin and from crypto, just behind US equities this quarter. I talked a bit, I hinted at a bit of this previously, but this is, I think, wanted to come back to crypto and show you a chart of where Bitcoin dominance is, and certainly it's grown, right, during this quarter to 47.9%. This is actually the highest it's been since 2021 Q2, right? So it's actually not been this high for a while. And like I said earlier, this is actually a sign of rotation out of stable coins, actually, and also out of altcoins into the majors. Bitcoin and Ethereum, you'll see on top there, pretty much only Bitcoin and Ethereum saw gains during this quarter in terms of their dominance, whereas everyone pretty much declined. Tether stayed flat, and we'll talk about Tether in a bit. But yeah, I think obviously as well as others, right? So this purple bubble, which purple color indicator, which sort of represents altcoins, have sort of visibly declined throughout January to June, and yeah, I think again, you would have maybe expected to see like a spike in May because we had like meme coin season and things like that. But I think by and large, it's been all Bitcoin so far for in June. Now, whether that will continue, we remains to be seen. But I think it's something that we're paying very close attention to in Q3, and watching the market and see where it goes. I wanted to get to stablecoins as well. So stablecoins actually saw minor outflows, down by 3.5% in terms of market cap, and we tracked this across the top 15 stablecoins. Yeah, it's down by about $4.6 billion. We'll consider this outflow from the stablecoin market. That means there were redemptions from stablecoins into dollars, pretty much, right? That's what that you can sort of assume. But I think even from a ranking perspective, we saw the trend starting in, even in March, right, with all the regulatory issues surrounding, BUSD, and FUD around USDC. The market has pretty much moved out of some of this, or well, migrated away from some of these stables into Tether itself, right? So USDT saw absolutely the largest gains from 3.48 billion, and that's like a 4.4% increase in their dominance. So they are now at about 66% of the stablecoin market, and that's like 2/3, right? So it's a huge dominance, and certainly not something that we have seen for a long time, especially since competitors like USDC and DAI and BUSD sort of emerged. Obviously, BUSD, we already talked about them, so continue to decline. They're now down to about 4 billion, and you can you can expect them to continue to shrink in terms of their market cap, as Paxos winds down the product, pretty much, right? Others, USDC saw 5 billion loss. DAI saw a small loss. I would say like 0.76 billion, less than a billion. And all those pretty much moved to Tether, moved out of the market, or actually moved to True USD, right? So True USD, I guess, is the surprise, or not so surprising, entrant into the top 5 this quarter, largely driven by Binance, right? So after BUSD was asked to wind down, Binance quickly switched to TUSD pairs. They quickly minted $1 billion worth on Tron. That actually contributed significantly to its market cap this quarter, and then implemented zero fee trading for those pairs, right? So obviously you're going to see a lot of volume. Obviously you're going to see some traders still move across to trade those pairs because it's just cheaper with zero fees. But I think to be honest, if you look at the data on Binance itself, USDT pairs still reign supreme. I think a lot of people still trading USDT pairs. A lot of people hold USDT. It's just simpler to trade those. If you're already holding them, and True USD actually ran into its own issues, right? So I think near the end of Q2, near the end of June, we started hearing significant issues with its custodian, Prime Trust, the auditor that it was using, and there were rumors or allegations that you couldn't actually redeem your TUSD for US dollars, which is a major part of a centralized collateralized stablecoin, which is to a large extent, the peg is to the US dollar is maintained by their redeemability when you need it to be. So I think it's quite interesting. Obviously, at this point in time, Binance is still supporting them, and it still has TUSD on its platform and on its trading pairs. So it'll be interesting to see whether this further develops. Yeah, I think just behind them is Frax, that fell of the top 5. They have about 1 billion in market cap now. Yeah. Outside of the top 5, I think some interesting things, some interesting gainers, GUSD, Gemini, USDP, Paxos, even though there are regulatory issues, actually saw gains, even though obviously from a smaller base, and then Flex USD as well. Moving on to Ethereum, I didn't pull up a price chart this quarter because I thought, like, yeah, the price is up by 6%, but that's not the most interesting thing that happened to Ethereum this quarter. I think most of us would be familiar that, this thing is the most interesting thing, which is, the staking landscape for Ethereum, and primarily around liquid staking derivatives or liquid staking tokens, right? So if you look at April, cast your mind back to April, and then, Shapella actually happened in middle of April, and that actually, earlier people thought that, oh, we're going to enable withdrawals. Everyone who's been staking since like 2020 is going to withdraw, and then they're all going to sell, right, in order to realize some gains, because, their ETH has been stuck in the protocol for like 3 years. It's crazy, and, they want to realize some gains. But actually what we saw happen was that, actually, no, the enabling of withdrawals actually gave ETH staking turbocharged the staking rate, and, ETH staking is up by 30.3%, or yeah, a gain of 5.6 million ETH being staked quarter on quarter. So this is a massive increase, and even faster than that what we have seen before Shapella, or even before the merge, right? And, it's just a sign, I guess. Two factors. One is, people are getting, now that, you can withdraw, and it's proven that you can withdraw, people are more comfortable to stake their ETH now. But also, I think, people are being drawn to the real yield that's being offered by staking their ETH, right? So it's shown that, you can earn ETH when you stake it, and, you can actually withdraw that ETH, right? And obviously, on top of that, people have built a bunch of products. You have heard of things like Pando. There's now a new DeFi segment now called LSDFi, right? Which are, DeFi protocols that are built on top of this LSD products. I think in terms of LSDs, you can see on the top right corner, Lido remains dominant with 31.9%. It's not much of an increase. I think they were at 31.2% or something like that. 31.4% in Q1. But some people have fallen off by quite a bit. Mainly Kraken. Kraken has fallen off because it's been asked. As part of its settlement with the SEC, it's been required to wind down their staking offering in the US. And I think you'll see that, Coinbase is being sued by the SEC. They may eventually end up there, but, like, their share of, stake ETH have started to decrease as well, right? Even though they have their own CBETH, which is the liquid staking component as well. Others still doing well, but they are still small. People like, you have heard of people like Rocket Pool, Stakewise, and Frax have also come into the picture. All in all, I think it's a positive development for the ETH ecosystem, and LSDs have really emerged as sort of a core primitive for DeFi that, people are going to build off on. And I think I'm pretty confident to say that, the amount of stake ETH will only continue to grow, I think, in the next few months, or even for the rest of the year, as more and more people, see that it's possible, see that it's safe, and then, they're willing to, stake their ETH for return. Yeah. Meme coin season. So one of the interesting things that actually happened in Q2 was, obviously in May we actually got meme coin season really kicked off by Pepe, right? And then followed by, all these meme coins that you see at the bottom. So AI Doge, that was an Arbitrum, ladies, representing ladies, Bob, Bojack, and Harry Potter, Obama, Sonic, Inu, right? But the ticker that they choose for themselves is Bitcoin, and I think really set off a frenzy among, the more degen traders, right? And I think what is really interesting is that, we do see meme coins come and go, right? Even in other parts of the market, but in other times, in other periods of the market, but usually they don't stick that well. I think people think about meme coins, they think about, Doge and Shiba Inu, right? But now I think perhaps there is now a new competitor to crown, Pepe. which grew significantly at one point hitting 1.8 billion in market cap. Is sort of like, you would say, like the new kid on the block, and seems to have more sustaining power. At the peak, absolute peak of Pepe, I think if you bought it when it was like 1 million market cap, you could have made, I think if you had held it all the way to the top, about 1,800 times return, which sort of, I guess, indicative of its appeal. Certainly, it's not the first Pepe coin, right? The which uses the image of Pepe the Frog, but seems like this one has sort of stuck, right? And sort of because of it, it kicked off all these other meme coins that also came to the market shortly after, like Wojak and Bob and all of that. The other interesting thing, obviously, is I mentioned earlier, so BRC20 on Bitcoin, it sort of came just right after, also in May, and had its own share of meme coins as well. So I think the most prominent one is ORDI, right? ORDI, and it sort of reached a peak market cap of about 600 million at its absolute peak. Yeah. So again, I think with these meme coins, we track them via the Gecko terminal. Most of them, especially at the start, because they tend to move quite fast, and tend to be small market cap until they get pretty big, and tend to be traded on the DEXs. So I think with these, it really, we don't really know, right, whether they will have staying power, whether they'll, it's just a flash in the pan. Usually they get big and then they sort of disappear again. But like I said, I think quite interesting, sort of some excitement in the middle of May when everyone thought that it would be sort of pretty quiet, right? So it may go away, but yeah, in in 2023 we actually saw a meme coin season, and quite a fair bit of excitement for degen traders. Moving on from the to the DeFi end, I think from a DeFi perspective, I wouldn't touch too much on this. I think the insight I would see here is that Ethereum and its layer twos continue to consolidate their positions. The interesting thing is Tron and BSC. So if you look at the chart from Q1, you'll see that pretty much they've always been neck to neck in terms of market cap, right? Sorry, in terms of total TVL. But in Q2, Tron has clearly pulled ahead in terms of share of TVL. But that is, I think, driven more by net outflows going out from BSC. We have seen a lot of FUD surrounding Binance in the last couple of months, and that has contributed to funds flowing out of Binance, but also flowing out of BSC as well. So for now, Ethereum has about 69%, close to 7. If you add up layer twos and things like that, more than 70% of the market. Tron is at 9%, and then BSC is at about 6%. So clear ahead, but let's see what happens in the next couple of months, whether BSC can recover from this. Moving on to NFTs, I know we usually show a platform view, but I think for this quarter, I wanted really to highlight the chain view of our slide. So this is NFT trading volumes across all the different chains that we have, and clearly, I think the thing that I wanted to highlight, one is pretty much Bitcoin, with Bitcoin ordinals coming to the fore. I think overall there's 35% decrease in the trading volume, but certainly I think a lot of people were actually trading Bitcoin ordinals. You can see that in May and June. What has happened? From resulting of this, you'll see that actually new crypto market NFT marketplaces come to the fore. So you may not have heard of places like Unisat, Ordinals Wallet, OKX. Actually started a Bitcoin ordinals marketplace, and Magic Eden also I think created a marketplace started supporting Bitcoin ordinals on their marketplace as well. And at this point, these are sort of the names that you can go to to trade Bitcoin ordinals. Those are the platforms that sort of have captured the early, I would say, share of ordinals trading volume. So that's pretty interesting. I think, as this ecosystem develops, we're gonna see how these marketplaces compete with each other on the Bitcoin network. Right now, it seems like the lead kind of rotates between these platforms from month to month. So I think that's pretty interesting. I think it'll be interesting to see who can actually hold on to the lead, or hold on to market share, and emerge as sort of like the Blur or the open sea of Bitcoin ordinals, right? Um, Other than that, I think, from a Ethereum perspective, still dominant, with seven with 83% of the market, right? Blur is still way ahead of OpenSea, right? I think a lot of people are still farming their tokens, but also, they also launched Blend, and that also stimulated quite a bit of activity on Blur as well. So right now, Blur is number one, OpenSea number two, and then interesting thing happening is sort of ordinals and these marketplaces fighting over market share there, and I think we are likely to see this play out as well in Q3 and perhaps Q4 as well. Just to close out, I think a word on exchanges. I think as you saw on the first slide, if you can remember, we showed you a complete drop off in exchange volumes, in traded volumes on exchanges. The big drop off actually came on centralized exchanges this round. So if you look at the top 10 centralized exchanges, their volumes actually decreased by 43.2%. It's a really, really steep drop compared to Q1, right? So this is Q2 versus Q1, down by 43.2%. Most of this can be attributed to Binance, right? As you saw, like the slide already started happening in late of March, and you can see clearly from the chart. As the volumes fell, so did their dominance. But I think perhaps no surprise, and maybe some people will say their death has been largely exaggerated when they still hold about 50% of the market, right? At least of the share of the spot trading volume. So they're still dominant, not as much as before, as you can see from the January, February, and March numbers, but they're still more than half the market, right? So they still hold a very, very important position in the market. Other than Binance, if you look at June, actually, you'll see that we track the top 10 and we put them on the chart, and you'll see that actually the of the remaining 9, so Upbit, OKX, Coinbase, etc., they actually have about equal share of volume, and I think this is a sign of healthy competition, and certainly there were outflows from Binance, and perhaps it's a sign of some of this of all these people stepping up, trying to get market share. But they're all very pretty closely bunched up together in terms of volume, right, and market share. And I think that is going to be very interesting to watch as well. Like so are they able to take this opportunity, capture more market share, establish themselves as sort of number two. Right now, it's been Bybit at number two, because of the Korean market being really, really strong in terms of trading. But we look beyond that, I think number three, OKX and Coinbase and Bybit and KuCoin, BitGet, Maxi, Gate, Kraken, they all have about equal market share of trading volume, and it'll be interesting to see whether they can step up and sort of challenge Upbit, and sort of challenge Binance, and sort of establish themselves as another of the front runner. The last really slide that I have is spot trading volume. I think on DEXs, and this is the interesting part, right? So you saw from the earlier slide that centralized exchanges decreased by about 43%. So decentralized exchanges actually lost volume less, so they're down by, I would say, only they're down by 30.8%, which is less than the centralized exchanges. This is largely actually contributed by the fact that they had a meme coin season, and we talked about meme coin season earlier, and those actually contributed to the volumes in May and helped them prop up the volume, because most of the trading actually happened on DEXs, on decentralized exchanges. Just to point out, I think this chart was more interesting than the exchange one. I think Obviously Uniswap is still the dominant decentralized exchange. They now have about 60+% of the volume, but that's contributed by Ethereum, but also Arbitrum becoming number two, and BSC third, Polygon fourth, right? So Uniswap being dominant on Ethereum, Polygon, Optimism, and having share on Arbitrum is sort of cement their position as the largest DEX, right? Yeah, I think that's sort of about it. I think you'll see that the other sign of BSC decline is also in the trading volume. They have sort of fallen behind Arbitrum now, despite being sort of neck and neck in January and February and in 2022 as well. Yeah. So that's it for my very, very quick summary, half an hour summary of our Q2 report. Like I said, we've published this 2 days ago. You can find the report on coingecko.com/research already on our website. There's more than 40 pages of charts and data and insights that we sort of put together for you guys. So do check it out. There's a lot of information that I couldn't cover in my 10 slides here today. And yeah, if you see anything interesting, do leave us feedback, comments, tell us what you would like to see, moving forward in our next quarterly reports and things like that. So thanks for listening in. This is the end of the first section. What we're gonna do now is we're gonna take a quick break, and then we're gonna come back with the second part of our meetup today. Like I mentioned, it's gonna be a panel discussion about Solana in 2023 and beyond. So stay with us. Just take a quick break, go and grab a drink, go to the washroom, and then come back again. And yeah, we'll head over to part two. Yeah. Hey everyone, welcome back. Thank you so much again for joining us. First, let me say welcome to our three guests. I know they have been waiting, so sorry for overrunning earlier. Can I please introduce? I'm very pleased to introduce. We have Austin Federa, who is the head of strategy at Solana Foundation. We have Amani Ferrate. Amani is the CEO of Backpack and a few other things in the Solana ecosystem. And then Miao, who's the co-founder of Jupiter Exchange. Welcome to the three of you. Thank you for joining us. And today we're going to talk about Solana in 2023 and beyond. Yeah, welcome, guys.
Hey, thanks for having us.
Yeah.
Hey, thanks, man.
Yeah,
happy to be here.
Yeah, good to have all of you. I think
Amani, that's
that's
an amazing beard.
yeah, pretty impressive beard and
Really impressive.
yeah. I think let's get into it. I think no avoiding the first question. I think the biggest question for the Solana ecosystem, after the whole FTX thing, it's been half a year, or slightly more than that. I think after that just happened, people were saying that's the end, right? So because FTX was a big supporter of Solana, and we saw users, we saw TVL, and we saw projects, leave the ecosystem, pretty much, after all that happened. I think, obviously it's sort of like a major event and, a major blow to Solana at that point. I just wanted, I think, go around the table and, talk to us about, whether that changed your thoughts about, Solana, about building on Solana. And I think for Amani and Miao, talk about, do you make any changes to your project, because of the event and things like that. But maybe let's start with Austin, I think from the foundation's perspective. Yeah.
Yeah, so one of the things to note here is we did see TVL drop. That was kind of ecosystem wide. That was not sort of Solana specific, but I think Solana DeFi got hit a little harder. We didn't see users drop, and we really didn't see any code-based projects leave the network. There were a few NFT projects that sort of decided to leave the network, but NFT projects are inherently portable, and a number of those projects are already moving on from wherever they decided to move to somewhere else again, right? So there is a little bit here where for probably a 2-week period, we saw a real drawdown in on-chain activity, as people sort of wondered, is this existential for the Solana network? And the answer coming out of that was no, not at all, right? What we saw is like a very strong resurgence just in a month afterwards. User numbers are higher than they've ever been. The network node count is back up to sort of the FTX levels, and DeFi on Solana is actually doing better than it was before the FTX crash at this point. It's been really interesting to see over the last sort of year, I'd say, but like the fruitions of that really came to in basically 2023, how Solana DeFi has reconstituted itself as something very different than the EVM world of DeFi, right? What you can build on EVM is very different than what you can build on Solana, partially because Solana is not transaction limited. You can run stuff like an on-chain order book, and you can have enough transactions to actually maintain that order book and that not be a cost prohibitive activity. You can have things like Jupiter where you have like complex routing layers that might involve multiple hops and multiple transactions, and that's not cost prohibitive the same way it might be on some other networks. So coming out of this, I think the community is really quite galvanized. We're seeing user numbers increase, and the developer activity on Solana has never been stronger. So it was something I think we all wish had never happened. But at the same time, like, this is the point of the bear markets. You flush out the bad actors, you flush out the scams, and you're left with the folks who actually are here to build.
Yeah, I think definitely, it definitely has sort of persevered. Maybe move to Amani. Do you sort of had to make changes to your project after sort of what happened?
Yeah, no, I mean, it's really easy to look at the Solana ecosystem today and look at all of the amazing projects that have persisted through the tribulations. But I think if you wind the clock back and put yourself in the shoes of not just people in the Solana ecosystem, but also just honestly anyone in crypto, it really felt like an existential, incredibly challenging moment. I mean, especially for our company, we lost the majority of our funding on FTX. For us, it was very much an existential event where we weren't sure if we were going to survive or not. We very much viewed it as, well, we felt like the market was definitely looking at Solana very differently than it was looking at other chains, even though FTX basically had its hands in basically every blockchain that you can imagine. It had large investments across the board, not just in Solana, but also in like Polygon and Starkware and Sui and Aptos. It was basically, had its tentacles basically in every blockchain ecosystem. But in Solana in particular, it felt the brunt of the, I think, I don't know, media force that kind of came down on crypto when that happened. And so from my point of view as like kind of an operator, we made a very conscious decision where we saw Solana having one of two outcomes. On the one hand, it could have withered away and died. But on the other hand, it had this crucible moment where it could transcend into a class of basically two other blockchains where you have like Bitcoin and Ethereum that kind of stand on their own, where those ecosystems aren't going away. They're never going away. They are basically unkillable blockchain networks at this point. And I think the FTX collapse was very much a blessing in disguise, where it basically forced the ecosystem to transcend to that category. And I don't think there's any going back. And I think it was a horrible event in so many ways. But for the long-term health and growth of the network, it felt like, if you're looking at the glass being half full, it felt like a very beautiful, phoenix rising from the ashes. And so I feel like that might be a little more of a poetic, but very realistic view of the series of events from my point of view.
Yeah, and Meow, from Jupiter's perspective.
Yeah, I mean, obviously, I think I agree 100% with what Austin and Armani said, right? I think from my point of view, it was a very galvanizing moment, right? I personally knew the FTX guys, lots of them, and I'll call it betrayal, right? That betrayal really went like, wow, we really cannot trust centralized systems, really, right? No matter how much you think you trust them, no matter how much they appear on TV, no matter how much the US Congress loves them, right? You cannot trust those guys, right? So I mean, I personally lost a lot, right, in the FTX thing. But I mean, honestly, after that, we were like, let's do it. Let's build something that allows users to not use centralized exchanges, right? And then and for us, obviously, the place to build that is Solana, right? And to back up what Austin and Armani were saying, right? It was the landscape is very different now. Culturally, it's very different, right? Culturally, the initial batch of developers that came in, right, were brought by FTX, right? Nothing wrong with that, right? But it was more, let's say, mercenary, right? Now it's not. Like I'm telling you, no one built on Solana for the last 2 years if they only care about money. No one does that, right? It's like the tech is still immature. The network went through a lot of issues, right? And it's like chewing glass, right? It's only thanks to the really amazing work of the foundation and Armani. Thank you, Armani, once again, right? That really made a lot of things better, right? But it was really brutal, right? Everywhere I went, I'm not even kidding. Everywhere I went, every event I went to, right? People ask me, why Solana? What is going on Solana? Is Solana still alive, right? So to actually consistently build through that, right? You wouldn't do it. You wouldn't, unless you have a certain faith in technology, you have a certain passion in the community, and then you saw something, right? That other people didn't see, right? Yeah. So I think so I think in general, I think and the other point that Austin made is very important, right? Is that as more and more different kind of systems come online, right? On like Phoenix and OpenBook, and a new one is the new LST layer, right? Called Unstick. You really have a lot of things that like Jupiter can combine a regular AMM, a really complicated CLOB, and a really unique program together, transaction, right? It costs like what 0.002 cents, right? Like you really start. I mean that to answer your question, that is the reason why we built, right? Why we stayed on, because even though most people can't see it, we kind of saw it coming, right? We kind of saw like, okay, at some point, right, when there was this critical diversity of DEXs that came up, when this critical mass of users came up, right, and importantly, critical amount of use cases, right, like payments, NFTs, direct swaps, right, FX, right, came up, right. That's actually what's powerful, right. So I think for us, so in summary, even though as Armani and Austin said before, it was very, very hard. But I think it made us a lot more clear that we want to build this thing, right? And then we also saw the potential of Solana, right? Because we were not observers, we were in it, right? We were going through everything, right? And all the things that people saw as like criticized, right? Like network crashing, everything. We saw opportunity. How many blockchains have the opportunity to test the network? Ethereum, Bitcoin, that's it. No other, very, very few other L1s actually had the chance to even get tested, right? So yeah, I think so. In essence, I think we hung in there. We built through it. We tried to support every project that came along, and I think we're very happy with that. Yeah.
Yeah. So I think you actually answered the next question as well, which is, why do you think, the ecosystem has managed to survive? I think, you talk about mercenary, not just capital, but also mercenary, builders or developers have sort of, also been washed out of the system, and, people remaining, are sort of, people who are really passionate about the tech and believe that, it's going to work, right? Like eventually, it's all going to work. I'm just curious. I think turning to Amani. I mean, I think through your work at Backpack, you obviously deal with a lot of different projects, whether those are DeFi projects, NFT projects, infra projects. Do you feel the sense? I think Meow sort of alluded to, DeFi has sort of changed a fair bit from pre FTX, but what is your sense? Like, do you see the nature of the project sort of changing on Solana? Yeah.
Yeah, I mean, I think definitely Solana kind of forged its soul with DeFi, and that was the initial kind of impetus, I think, for a lot of the technology that was being built. And then it had this very kind of, I don't know, surprising and serendipitous path towards NFTs. And that was really where the network found incredible product market fit and incredible growth over the past couple of years. And I think what we're seeing right now is a return to DeFi. And I think that is the area where there's not only long-term product market fit, but also just long-term unique competitive technological advances that Solana brings to the world that you can't find anywhere else. And so I think we're seeing a resurgence of that, definitely seeing a resurgence of that on the Backpack and even on the Mad Lad side, where you're now seeing the crossover between NFTs and DeFi and allowing one kind of community to bootstrap the other. And I think that is going to be a lot of the story and narrative that we see play out definitely over the next year.
Nice. I think Austin, when you started out, you mentioned, user counts are the highest that they've been, right? Could you describe a bit about who these people are? So are these like, new users that are coming back? Are these, previously people who sort of got out because there was a lot of FUD and then they sort of came back? Yeah.
So it's kind of across the board. Solana has some of the highest user retention numbers in Web3. If you look at there's a bunch of Dune dashboards and Flipside dashboards, it'll show you sort of someone who comes in, they buy an NFT, they do some sort of transaction. Do they stay in the ecosystem, or a week and a half later, are they basically inactive, right? And so Solana has one of the highest retention rates kind of any chain. And I think that's a real testament to how integrated the ecosystem is, right? Like Stepin's a great example of this, right? Stepin, it's a game, it's a fitness tracker, it's somewhere in between. But you come into Stepin, you're like, oh, cool, I can buy these sneakers, I can like have some fun. And then you're like, I got all these tokens. And Orca's whirlpools and like Jupiter and things like that are integrated directly into this. So it's very easy then to say like, oh, this is actually worth real money. Maybe I'm going to go and do a swap and like now poke around with Solana DeFi. And because you're not burning $5 every time you want to try and experiment with a new DeFi protocol or try and do something new on the network, there's much more freedom to just like do what you do when you join any new social network or any type of application. You click around a bunch and you experiment, you learn things, you maybe come across Backpack and X NFTs. And like it's the friction of exploring on Solana is so much lower because the transaction fees are so much lower. This will not be a moat forever for Solana, but for now it is, right? Like I think all blockchains are moving in the direction of becoming higher performant with lower gas fees. That means they're going to take a lot more data to run. Like there's the trade-offs that Solana had to go through over the last 2 years, the rest of the industry is just starting to go through, and there's going to be a lot of growing pains, I think, for a lot of other networks. They go through this. We saw finality issues with ETH earlier this year, right? Very different than an outage, but still, like these are growing pains. But the users on Solana are there because the applications on Solana can really truly only be built on Solana. Like there's a lot of things that today are only possible on Solana, and that's what's attracting all of these users to the network.
Yeah, I think Solana has always been known for being highly performant and cheap, right, since launch, and with the throughput and the transaction costs even lower than those on layer 2s on Ethereum, that people are very hyped about. But I think, the network has continued to build. I wonder if you can share also a bit of, what's being done at the protocol level to, further improve the experience for users and sort of developers coming to the ecosystem or building on the ecosystem.
Yeah, over the last year, there's been 3 foundational technologies that have been shipped. One is a new networking standard for the network that just improves flow control and performance. The ones that actually users start to see and feel are things like local fee markets, right? And so local fee markets are an innovation on the classic fee markets that we all, let's say, know and love. Where on Solana, so if you look at like most networks, they're transaction constrained, right? There's more demand for block space than the 15 or 20 transactions per second that something like Ethereum can handle. On Solana, we have a very different problem, which is that there's actually plenty of block space. Transactions are incredibly cheap, and the network is parallel, which means doing one thing over here is not going to impact your ability to do something else on a different part of the network. So when the Mad Lads mint was going on, huge demand for that mint. It didn't affect the cost of trading on Jupiter, right? These are sort of independent fee markets. Now, why do you need fee markets at all is the obvious question. So one is spam protection, but the second is writing to the same piece of state. Everyone trying to do the same thing has to be sequential, right? This is just a computer science problem. You can't have multiple people trying to write to the same block at the same time. That causes problems. And so you saw fees to mint a Mad Lad spike to, I think, all the way up to almost 1 penny, right? Which is a massive fee for the Solana network. But that fee had no impact on someone's ability to trade on Jupiter for fractions of a cent, right? And so this is kind of one of those main technologies that now users don't even see it. There's no gas slider when you go into a Solana wallet. The wallet just automatically says like, okay, we got to increase the base fee from, 1/100th of a penny to 1/10th of a penny to make sure this transaction goes through. No user is going to particularly care about that much of a fee increase. And so it's all just kind of done in the background. And so, those are some of those like things that have been shipped that have really made a huge difference on the network. Looking forwards, there's some projects like interface design, which is going to make it easier for people to deploy custom contracts. There's a new token program coming to the network called Token 2022 that's going to be sort of done and shipped this fall. That includes some things like confidential transfers, interest-bearing tokens. It brings a lot of cool new functionality to the network. But because Solana is built so different than other networks, like we've basically had something like account abstraction from day one. There's a lot of these types of things that are like catching on in other ecosystems now that either Solana's had for a while or Solana's importing. Like the way NFTs are built on Solana is incredibly different than the way NFTs are built on an EVM chain. There's huge advantages that come with building it in a new way. There's some disadvantages too, but like you can build new types of things on Solana that just haven't been built elsewhere because the network, like liquid staking solutions on Solana, are also very different than the Lido world on Ethereum. These are very, very interesting new models to explore. And so both developers and users, I think, are kind of really enjoying a little bit of a different take on the classic EVM model.
Yeah, certainly. I think when you interact with Solana, and then when you move between Bitcoin, move between Ethereum and even the layer 2s, it's really is a vastly different experience. It's almost like going to different countries, right? And each one has sort of got its own twist and its own flavor and things.
Yeah.
I just want to jump in here real quick to reinforce Austin's point. That is so different, and it's really interesting because we are seeing the EVM experience, right? Basically just replicated, throughout all the L2s, right? In fact, all the L1s, they look the same and feel the same, right? But I think like the ability for Solana to offer a really new transactional model, right? A really different take on how we do things, right? It's actually one of the reasons why we built on and why we think that, I mean, okay, to be clear, I don't say everything should be on Solana, right? But I would say that there's going to be a very large number of use cases like payments and games that should be on Solana. I think that's and because of these unique things that Austin was pointing out.
Yeah. I guess sort of the flip side, I think, to the performance is there are still outages. I think touch wood, we haven't seen one since February, right? So it's a good sign, I think, and I would think that like implementing sort of the local fee market sort of helped a bit. But Austin, I think from the foundation's view, I think tells a bit about, you know, what's, you know, why sort of are we still seeing this, and, you know, are there sort of improvements also on the way to sort of, you know, make sure this problem just goes away, and we don't have to talk about it again.
Sorry, the problem being
Outages. Yeah.
Oh, so this is a very unpopular take, but we're going to see more outages on more networks.
Oh no.
And we're going to see fewer outages on Solana, right? These are two things that go hand in hand. As these, like, one of the really interesting things that we see, and we've already seen this, right? We had Arbitrum had an outage because they didn't top up a fee wallet.
Yeah.
Like, L2s are incredibly centralized right now, and they're trying to be higher performance, right? These are things that actually everyone is going to face. I think what we are going to see is more solutions to work around liveliness failures of L1s and L2s and L47s and whatever happens to come next. We're not going to see less, right? This is sort of like AWS does go down sometimes. GCP does go down sometimes. We have systems in place as like a technology culture to be able to deal with a lot of this stuff. Sometimes that's different availability zones, different redundancy systems, right? There's lots of ways you can actually write back to a DA layer. And sometimes, like, a lot of the work the Ethereum community has done is made it so that Ethereum can actually deal with an hour or two of no finality, right? And a lot of people tell you, oh, it's no problem. And like, I actually vehemently disagree with them that it's no problem. If it was no problem, we would never need finality on Ethereum. And we obviously need finality on Ethereum, but we can build systems that actually can provide not as high degree of certainty as when you have finality, but high enough for most types of things. Like, maybe don't buy a $10 million mansion when you don't have finality on a network. But if what you're doing is like trading some NFTs, or you're interacting with like a social contract, stuff that doesn't have high economic value, maybe it's totally fine from that perspective. You know, on the Solana side, though, like Firedancer, which is a new validator client coming to the Solana network, will be shipping sometime in the next year. We'll probably see some version of that on testnet this year. This is really important because Solana is going to be only the third network to have multiple validator clients. So currently Ethereum has multiple validator clients and Bitcoin does. These validator clients are really important for liveliness and for sort of long-term decentralization of the network. But again, because Solana is built slightly differently, it's built to be high performance, right? Ethereum is built to hit a certain transaction per second model and a certain data framework. Solana is built to be high performance. So you'll see something like Firedancer as a primary client, and then if that there's a bug in that client, something happens, there's a fallover to like the current version of the client that's running on the network, and then these systems can sort of step back up. So you can sort of think about it like, if you have a hospital and the city's power fails, well, there's still generators in a hospital. And those generators can't quite do everything, but they can do enough to keep the important things running. And that's, I think, the model we're going to see with a lot of blockchains, is that we're going to have a more elegant failure state for all of these networks. That's not the binary of is it on or is it off? It's like, what capacity of its theoretical performance are we running in based on a bunch of different network conditions? And there's a ton of other pieces of tooling that are coming, from asynchronous block production, to separating block production from block execution. All of these things are going to give network operators, meaning validators all around the world, the thousands of people and entities that run the networks, more control over how to respond in adverse situations. The same way that the early internet was like, oh man, there's one server and like everyone's trying to download our PDF, and like, oh, the internet's down. For that's a model of the early days that doesn't necessarily track. But I do think that we're going. My prediction for 2023 and 2024 is we are going to see more things that we would have previously called outages that we're not going to see people calling outages anymore. The language is going to change around them to be something more acceptable. And so if you look at Solana, like there's, over this year so far, it's had perfect uptime except in February, where there was one outage, which I think is about a 98% uptime for the month of February. And so that's a massive improvement in what we were seeing a year ago. That will continue to improve, but I don't want to put anyone's, there's never been a software system that doesn't sometimes go down or sometimes have issues. We're going to see more of that, not less of that.
Yeah, and I think certainly, we're hoping that like you said earlier, that there'll be more outages. I'm sort of hoping that people can sort of learn from the lessons that earlier chains have gone through, like what you guys have gone through, and sort of make it not so choppy to sort of use the blockchain, especially those that are just building, and surely there are lessons to be learned here.
Yeah. There's tons of lessons to be learned. And, look, there's some really great designs that went into the ETH2 transition conversation, right? They've got this interesting model where basically if two parts of the network can't resolve a fork, they just slash each other until one of them has a majority. That requires a ton of manual intervention to not evaporate, billions of dollars of value at the end of the day, but it favors liveliness, right? And so there's a lot of different design decisions we're going to see. One of the things I really strongly believe is that the next biggest challenge of blockchain is not technical. It's entirely the human coordination layer.
Okay, nice. I think coming to you, Meow, with Jupiter, you recently launched version 2 in March, right? And today we saw announcement you're integrating liquid staking into your offerings, and there's a major release coming, I think, next week as well. I think walk us through a bit about some of this. Maybe some people haven't touched Jupiter for a while. Certainly, you sort of evolved a lot from the original swap aggregator.
So I think so before I go on to that, I just want to touch on to what Austin was saying earlier. You know how the old saying, if a tree falls in the forest but no one sees it, did it really happen? Yeah. I think that is true for many outages in many networks. Like no one, it just fails all the time, just no one cares, right? Because no one uses them, right? The fact that the fact that people care about Solana so much means that people really pay attention and people actually use it, right? So I think that's all I would say, right? And also there's a certain high standard because we do actually, for example, for Jupiter, right? We want to become like we want to replace Sexus, right? Binance, right? So we want to be uptime 100%, right? That's why we care, right? But it's because of these high standards or high usage and high attention. That's why people talk about Solana outages more, right? So I think I just want to really put it out there, Okay, but sorry. So going back to
Jupiter.
Sorry, I just had to say it because it's just like it's a really important point for people to understand when we talk about outages on Solana, right? All right, cool. So Jupiter, I think in March, I think we did a major upgrade, right? And the upgrade was really focused on key advantages, right? So Austin mentioned earlier some of the major things that happen in Solana, right? For example, priority fees, version transactions, right? And a whole range of other like infra level improvements, right? So our March was really focused on like leveraging that, right? So introduce priority fees. We introduced like much more advanced routing that we couldn't do before, right? And I think as a result of that, I think users could see, wow, you can do a dollar transaction and very complicated, and it costs like a small cent of the volume, right? And obviously, we also integrated a large number of like other indexes, or for example, the token 2022 kind of thing. So I think so I think for users that have not used I mean Jupiter is like the one of the most used programs, right? So we had a lot of users use Jupiter in the past, but they maybe haven't used it in a while because of the Solana thing. But I think they're going to come back, right? As they come back, I think they're going to see that, wow, things are a lot smoother now. The things like priority fees, as Austin mentioned, are just done in the background, right? You don't even see them, right? And then there's a lot more dexters now. You're going to see a lot more interesting routings now. There's going to be 2 or 3 order books by the time you come in, right? So I think users are going to see all that, right? But obviously, the really cool thing about it is that like all that complexity is hidden from the user, right? What would normally cost like $20, right, on Ethereum, right, or even a few dollars on other L2s, right, would cost like almost nothing on Jupiter. So I think so in summary, I think the one thing that I get a lot of feedback in, right, when users come back is that they go, wow, you can do all that and it still costs only like a fraction of a cent, right? So I think that really impresses them. Yeah. So I think so that is like the March release. And in the coming and today we announced like liquid staking, and that's a really big deal because LSTs just become so much more liquid, right? You can go from like SOL to MSOL or digital SOL for like almost 0 seepage, right? And it's huge. And again, you can't do that on Ethereum, right? It's very expensive to do Ethereum, but you do on Solana, right? And for the upcoming release, we are going to introduce like what we think is going to be the most advanced like routing algorithm, right? In DeFi, right? Certainly anywhere in production. And again, it will cost like it will bring and it also really scale. That means that as the number of DEXs increases, as the number of one more thing is actually really important. One thing that people don't understand about Solana is that things keep improving, right? Like for example, there's this for example, version transaction unlocked a lot of use cases where it allowed programs like Jupiter, right, to use a lot more accounts than before. And so there's also this thing called account lock limit that's going to increase as well at some point. So we are just building the next version to be able to capitalize to, number one, introduce the most advanced routing algorithm in DeFi, to scale much better as the wide diversity of like DEXs increases, as well as some of the constraints in Solana improve.
Yeah, I think those are all really interesting developments. I just wondered, I think from the other perspective, so from the user's perspective, perhaps talk to us a bit about, what are users currently trading on Solana? We have seen trading volume fall off, so I was wondering, how best, people can sort of work towards bringing back trading volume into Solana, because, it's a sign of user interest, obviously, but also it's important for DEXs, right? People have to make fees that pays for projects and things like that as well.
I mean, I cannot agree more, obviously, right? So obviously cannot agree more. So I think I mean, to be very clear, I mean I'm telling you, like there's a very simple answer. You need tokens that people want to trade. That's it, right? I mean, we can talk all day long about like what tag everything, but simple, we need tokens that people want to trade. Right, when Bong launched, right, we saw an uptick in Bong when Robit came in, the uptick Robit, when the meme coin student came in, people traded meme coin, right? When So pumped, people trade pump, when So dump, people dump So, right? So I think certainly the first thing is to make it is to make it clear, right, that we need more good tokens on Solana, right? And it's something that I think the whole ecosystem is very aware of. But let me take a chance to say something that I think is very important, right? And I really want to take a chance to say this. People have been criticizing Solana for not having enough tokens, right? But remember, the Solana culture has changed. It is not like you go to an L2 as an Anon project, you copy and paste your stock code and you deploy, right? And you have a coin, right? And you LM it. It's not the same. Every legit team in Solana is real. They poured years of the effort, spend a lot of time focusing on all the technical details, and they care. But they care, they have one shot of the token. And certainly we do, right? We have one shot token, right? So we care. We really care about making it right. So I think I don't see that as a negative thing, that Solana teams are being careful, right? They want to build a community, they want to build a product, and then they want to make sure when the token launches is good, right? So that's the first thing. We need good tokens, and I'm very, very excited for the coming release of tokens, because it's going to be completely different from the first Solana season, where people just went, oh, let's go pump, right? But the next Solana season is going to be different. All the teams that launch tokens are going to care. They're going to have a community, they're going to have a product, right? I mean, they're going to really care, right? So I think that's very, very positive, right? I can't predict token price, right? But I can predict care. People will care, right? The teams care, the users care, the community care, right? So I think that's really good. So that's the first thing. The second thing that can be the second thing that can actually be improved to improve trading volume, right? Would to bring more wrap tokens like Bitcoin and Ethereum into Solana, right? For that is a slightly different question. For that, I think we do actually need we will actually need more users to come in, because as more retail users come into Solana, they want to buy Bitcoin, right? And then to buy Bitcoin, right? They will and they will they'll buy a Solana, then the spread can increase, right? So when the retail users come, then I think the market makers will come as well, to provide that demand, right? For the tokens that users will trade, right? And thirdly, thirdly about attention, right? I think as more and more teams start to do incentive programs to draw users back in, right? Then I think things will just like come by itself. So in summary, I think there's this virtuous cycle that needs to happen, right? Whereby good tokens come, like users come in, there are good tokens, right? And market makers want to come back in. So I think there's a certain virtuous cycle that I do see forming, right? Big time, right? And I'm not promising how long it will take, right? But it will happen, right? And I think when that happens, then the virtuous cycle begins. Then we are for it, we're here for it.
Yeah, I think certainly, if trading volumes come back, I think Jupiter is sort of primed to capitalize on that, right? Given that you guys are sort of the largest DEX aggregator now on Solana.
Okay, so then let me join real quick on that. I think our main point here really is to kind of like add value, right? Like make it like super user, like give users a good impression when it comes to Solana, right? Help DEXers, such as new DEXers get liquidity, right? And obviously kind of like let help any DeFi protocol or DeFi wallet like just like do a better job. Yeah, so I think so that's what I'm here for.
Yeah. I think moving to Amani, I know we've kept you waiting for a bit, and I think when Backpack launched, I was watching it. I think the concept of NFTs was really, really interesting, right? It's sort of like Backpack was sort of like an operating system and sort of a wallet. You can download apps, NFT apps, and interact with it directly from Backpack, right? You didn't need to jump in and out. You wouldn't need to connect your wallet again and all those things. Just like how you would use your mobile phone, right? You can download apps and you can launch it and it will just work. I guess question about where the idea came from, and why only you doing it? Like why other people not also trying the same thing? Is there something that is really difficult, really complicated for this?
Yeah, to be honest, that's a question I ask myself very frequently. Why are other people doing this? I think the idea is a very natural progression from simply thinking about the end state of wallets, right? Nobody wants to have the same app on a bunch of different blockchains where they all do the exact same thing, but they all just have a different URL. That's just like very clearly not going to be the end state of the world. And then moreover, if you take a look at a single ecosystem, well, nobody wants to have a single gatekeeper for any given L1. And so if you kind of take this view of the world, right, where you want every protocol in crypto inside of a single user interface, and not only do you want that, but you also want it to be, well, I don't know, decentralized and permissionless, like the kind of most important values of a blockchain network, right? And then, well, how do you build this? Well, XNFTs kind of fall out, right? And if you can tokenize it and put it on a blockchain, and you can use NFTs as the underlying file format, but really what you're building is a plugin system for a wallet. And that's really as simple as that. I feel like why don't other people build it? Well, I don't know. I think we saw a lot of other L1s when the idea came out run with the idea. So I think Sui ran with the idea and they built their own version of it. I think Near has built their own version of it. I think Polygon had previously explored it. I don't know how far they went. I know a bunch of folks in the Ethereum ecosystem, particularly those that really value decentralization, have been itching for somebody to run with the idea. But yeah, I think it's not particularly innovative or insightful, but definitely one of those, in my opinion, no-brainer kind of products that just needs to exist in the world. And so that's kind of where we were coming from with the idea. And it's kind of as simple as that.
I think a lot of I think coming from the user side, especially newcomers, right? Like you said, nobody wants a million or more than 2 or 3 wallet apps to be downloaded on your phone or in your browser plugin to access however many other DeFi applications that you had to bookmark and keep and make sure that you could keep track of all your assets. I'm just wondering, could you tell us a bit of, how do you foresee Backpack improve on the design of some of these wallets and in terms of user friendliness, but also in terms of things like security and privacy as well?
Yeah, so fundamentally the problem that we're solving is thinking about all of the complexity and contextual information that one needs to simply use anything in crypto. And this is perhaps best illustrated by just like taking or going through the onboarding experience from zero to NFT holder chat. Seemingly, it should be a simple thing, right? But if you actually walk through the steps, it's truly an incredible experience. So like, bear with me, because like you might go crazy hearing this. So what do you do? First thing you might do is you might download a wallet, right? So you're like, oh yeah, I need to buy an NFT. If your friend tells you to buy a wallet or to go to a Chrome store or go on your mobile app or whatever, and you download a wallet, great. Okay, you have to deal with the seed phrase thing, whatever. Okay, that's kind of complicated. That's kind of weird. But it's like, maybe it's a passphrase or something. Oh, it's like, okay, great, I got that. Well, now I need to actually get the gas token if I'm gonna actually use any apps. Well, it's like, how do I get a gas token? So I have to go use this exchange thing, right? Well, what's an exchange? Well, like, I don't know, maybe it's like the New York Stock Exchange, but like for crypto, and it's like, okay, great, I can understand that. So you go to Coinbase or one of the other exchanges, you sign up your email and password. Then you have to have a 2FA, that's no problem. But eventually you have to KYC. It's like, okay, great, I have to KYC. So you put in your social security number, maybe you take a photo of your passport, you have to fiddle with the camera to make sure the computer vision lines up. And eventually, you submit your KYC information and hopefully nothing goes wrong. If something goes wrong, and like, oh boy, you're in trouble. But maybe you're lucky and you get your account. So great, you're inside, but you're not done yet, right? So after you've KYC, you have your account, you poke around in the UI, hopefully you can find the buy now button, or maybe you end up in an order book. And if you end up in an order book, oh my goodness, good luck with that. But you actually realize you need to fill on ramp, right? So you have to connect your bank information, maybe you ACH in, maybe your credit card. If you ACH in, then I don't know, you have a clawback issue, so you actually can't withdraw any of the funds, but hopefully you get it in, eventually you get the money in, you buy the tokens, maybe some Sol, maybe some Bitcoin, maybe some ETH, and you have inside your wallet, and then, if you ACH in, you can't withdraw. So you have to wait there a couple of days or whatever. Maybe you did a credit card and you get lucky and you actually get the tokens and you withdraw. But when you actually withdraw, how do you do it, right? Well, it's crypto, so it's all really scary. So you actually open up your wallet, you copy and paste the address in to your exchange app, which is a separate web app, right? And then you don't send the entire funds, but you send like a penny, right? You don't do one Sol, you do like 0.0001 Sol, because you need to make sure that it goes through, right? So you do that, on Solana it takes like a second, maybe on another blockchain. If you're on Bitcoin, it might take like 15 minutes or something like that, and it goes through. You see it in your wallet, great. You go on to the next experience, and then you finally get all your funds out. It's like, okay, oh my gosh, this is taking so absolutely, it's just ridiculous, right? This is all just to get the gas token. You haven't even gotten the NFT yet, right? So how do you get the NFT, right? Well, then you need to go to Magic Eden or Tensor, or one of these other really great NFT marketplaces. You go buy the NFT, you connect your wallet. It's like, well, what is this wallet connect thing, right? Like that's kind of weird, right? You have to approve it, you have to connect your wallet, you have to find the NFT in the marketplace, you click buy, you get it. Well, that wasn't too bad. Those apps are all pretty well optimized and they're pretty well built. So shout out to those guys. But you got the NFT. But what you really want is that holders chat, right? Because that's where the alpha's going down. That's like the social community. That's where things start getting fun and exciting. You want the token gated experience, right? So how do you do that? Well, so you went through all these steps, and that was just to get the NFT, but you actually want to go to where the action's happening. So I don't know, maybe you go to Twitter, right? You go to Twitter, you find the profile, maybe you see the Discord in the bio, then you have to go download, Discord. Hopefully you have it downloaded. You don't have it downloaded, oh boy. But then you end up in Discord, right? And then you have to verify you're not a bot, maybe check some stop signs or whatever. And then eventually, you get into Discord, but you don't actually see all the channels because they're token gated channels, right? So you have to they do this Magica Connect, they send you out to Magica to yet another website. You have to verify with Magica, they've done an incredible job. No shade at them, shout out to Magica. They're incredible, super important in the ecosystem. But nevertheless, you have to go to Magica, pull out your ledger, sign it, pray you don't get rugged. If you get rugged, oh boy, maybe you don't get rugged. And then you go back into Discord and then that's that, you're in, right? You probably ignored half the things I said because it's such an incredible amount of steps that we've all gotten used to simply interact with any token gated experience. And it's everything from the KYC user onboarding to downloading the extension to buying the tokens on an exchange, to withdrawing it to your wallet, to downloading all of these kind of various apps, just so that you can get into the token gated experience. And this is fundamentally the problem I think that we are trying to solve with Backpack and with everything that we're doing around it. It's an incredible set of steps. And we think if we can streamline this full experience and make it intuitive, then we can grow the kind of crypto ecosystem. And it's really, well, as simple as that.
Yeah, I think when you describe this whole process, I'm not sure if you can see the comments, but everyone in the audience is laughing. And like you said, we sort of all gotten used to this crazy things that we put ourselves through just to, sort of and get into a Discord or whatever, right? And I'm sure that the audience has got no shortage of stories of, being stuck off a chain because you ran out of gas and then you had to beg somebody to send you gas, to try to get off a chain or something like that. So yes, I think kudos to that. And if you can fix that, I think it definitely will make a lot of people's lives a lot easier. I think Backpack is still only available on the browser. I think there's a mobile wallet that I think is coming soon. When can we expect some first version to launch? What's the experience going to be like? I think is it going to be similar to how the browser plugin works today, or?
Yeah, it's going to be very similar. I think there's going to be a bunch of staggered releases coming with a lot of the new product that we're building. So first version should be hitting test flight for the Mad Lads first week of August, but there will be a lot of exciting stuff to come. I don't want to ruin the surprises, but yes, we're actively working on mobile. It's the top of the mind. It's the most important thing on our priority list.
Yeah, I think speaking of mobile, I think wanted to turn this back to Austin and turn this back to Meow as well. I think it's kind of weird. Like crypto is still sort of stuck on laptops, and we haven't really made the transition to mobile, even though everyone's got sort of an iPhone or an Android phone in your wallet all the time, and that's how you interact with the rest of the world, right? And I think with mobile user experience being more important than ever, I was just wondering, maybe Meow, you can talk about what are sort of the challenges you see in designing dApps for mobile users, and maybe Austin can talk about what's going on with Saga, right? The smartphone initiative, and how is that working out? And
Yeah.
yeah.
So we saw a few different crypto phone product ideas launch over 2021 into 2022. I think the adoption of something like Saga has not been what we were hoping for, but most other crypto phone projects have just been wholesale canceled. Like the Nothing Phone 2 launched, and unfortunately, I was hoping they would expand their integration to support multiple blockchains, but there's actually just no blockchain integration on that phone anymore, which is too bad. I think we're seeing more from like Samsung's Knox program is really interesting too, where they're actually bringing something very similar to a seed vault, which is on the Solana Saga, which is like not quite a hardware wallet, but it's much closer to a hardware wallet than any software wallet. The custody piece is part of it, right? So the vision of the Solana mobile stack, which is a fully open source stack that any Android phone manufacturer can take and use. Would love to see Google use it. Would love to see, like, especially in developing markets, to see folks pick it up and use it. If you work for a phone company, or if you know someone who works for a phone company, please reach out to me. We'd love to help sort of get this going more. But the idea with this is basically similar to what Microsoft did with the Surface line of computers a decade ago. At that time, all the Windows computers out there were terrible. The physical hardware quality was really bad. They didn't make any sense. They were really hard to use. And Mac was just like sweeping the table from an industrial design perspective. Microsoft showed up and showed that there was a market for a $1,500 Windows laptop that looked as good as any Mac. And like the rest is history. You can now get a fantastic looking Windows computer that looks just as good as a Mac. And it's very easy nowadays. The whole point of the Solana mobile stack is to show phone manufacturers and software vendors that there really is a demand for Web3 mobile. And I think you have to start with the custody solution, because if we actually think that Mad Lads are going to be a major part of our digital identity going forwards, if we actually think that like I'm going to be going in and paying using Solana Pay and USDC or some other payment protocol and some other stablecoin at merchants all around the world, it has to be as secure as it possibly can be. And software wallets are not as secure as they can be. At the same time, no one wants to carry around a ledger and just pin code in every time you want to buy a coffee, right? So the whole idea of this stuff is to make this whole transition easier. The bear market certainly hurt mobile plans across the board. But the Solana Labs team, which is the team that builds the Solana mobile stack, is definitely still committed to bringing that software stack to new platforms, new manufacturers. And, who knows, we may see a Saga 2 at some point as well, or other sorts of hardware devices from them. But the bear market certainly hit a lot of those expansion plans.
Yeah.
Yeah.
Meow? Yeah.
Yeah, I just want to I think from our point of view, I think unlike a lot of other teams, I think we treat mobile as a first class citizen. Right? That means that we really care about the mobile experience. We actually test our mobile experience as heavily as we test the desktop experience, right? Precisely what you said, right? Is I think a lot of people do access through mobile, and we think that especially in developing countries, they don't even use the laptop; they just use the phone, right? And so I think it's actually really important to actually cater to the experience. I do want to say something important here, though. Is that like mobile apps have the issue of ambiguity, right? Like you can't for example, there's this really bad thing that happened called Slope Wallet, right? That basically leaked a lot of like private keys, right? You know, all over. And you know, like I think users have to basically trust, right? You know, that the app is not doing anything weird, right? And not to mention that the iOS, not to mention Apple and Google have this like massive like gate that kind of makes it really hard to actually ship, you know, mobile apps, right? Yeah, so I think in summary, I think I completely agree with you. I think it's a really important problem. So we are kind of we are solving in a few steps. Number one, making our experience as easy as possible. Number two, we engage with all the wallets. If there's anything that's broken or not usable, we talk to them to make sure there's a good experience there. And thirdly, is that I think we have to you know just um which is why having like highly trusted wallets, right, like Phantom and Backpack is really important. And MetaMask is really important. Yeah, I think the more like these great trusted projects stay longer, then I feel like the more people trust the mobile solution, and then the more like dapps like ours will start building for these things as well. Yeah.
We did mention Mad Lads a couple of times, and sort of Amani is also the co-founder of Mad Lads. So I don't think we've talked about NFT much in this call. So you know, we're sort of running out of time, but I just wanted, I mean, we'll come back to Amani and, you know, talk to us a bit about Mad Lads. You know, you built this exclusively for Backpack. You know, tell us, you know, why you started experimenting, and, you know, what does the NFT scene look like now on Solana?
Yeah, I mean, NFTs are this like crazy world where nobody really expected them to blow up in the way that did. I certainly didn't. And the motivation for us doing Mad Lads was multifaceted. On the one hand, we were building a lot of this tech. We were building the wallet, we were building XNFTs, and we fundamentally felt that, well, in order for us to actually build a useful product, we would have to, well, eat our own cooking. So it's like, all right, let's do an NFT project. And that was kind of like the starting point. But as we got kind of further and further into it, we very quickly realized that, well, we should do this exercise and we should do it in like the biggest way possible. Let's spin it off as a separate brand, not as a separate company. It's the same group of people working on both, but we very intentionally separated the Mad Lads brand from the Backpack brand so that we could, well, focus on getting distribution as effectively as possible in a pure brand sense of the term. So in the same way that, like, I don't know, like Nike or Red Bull or any of these other big kind of brand focused kind of companies are able to get distribution just by doing really cool things kind of all around the world, we thought, well, let's just do the same thing. And this can be one of the ways that we can grow crypto demand. And so let's focus on everything that makes crypto special. You know, the branding, the community, the NFTs, the connections with people all around the world, the really vibrant, incredible social layer that's developed on Solana. But let's throw out the whole crypto part. And let's just not focus on that, right? Let's just focus on Mad Lads. And let's focus on the top of funnel and just like do a bunch of really cool stuff, you know, whether it's content or whether it's just, you know, hanging out on Twitter, or, you know, some of the more product stuff, and again, just more kind of further down the funnel. But let's just grow demand for Solana in that way. And if we can do that, then, well, we think that can have a lot of positive second order effects. And so Mad Lads really for us is the social fabric of kind of, I think, everything that we do, but also has become what I would describe as one of the heartbeats, I think, of the Solana kind of NFT ecosystem. It's been an incredible, I think, kind of bear market success. And so part of it's product, part of it is top of funnel, like, you know, demand generation. But I think it's really grown into, I think, one of the kind of leaders in the Solana NFT space. And I think I hope to see it continue to grow.
Yep.
Yeah, Mad Lads was amazing. I think Mad Lads really brought a critical amount of energy and innovation and just like raw like different excitement, into the space. Yeah, so like and amazing to see the execution, man. Just superb. Yeah.
Yeah, we just about run out of time. I know I didn't manage to get through all the questions that we would, but I think just wrapping up this session, I wanted to give you guys a chance to sort of wrap up and sort of talk about what are your thoughts about the ecosystem, how is it going to evolve, in 2023 and beyond, right? So coming back to the title, which is what do you think we can expect from Solana and from your respective projects, and what do you hope to see the Solana ecosystem evolve towards? So maybe Austin first.
Yeah, I mean, we are still in a place where I'd say this is like the year where we're starting to see the transition from building primitives and building tooling that will enable people to build new stuff to the stuff that's actually usable and user friendly launching, right? Like I think like Spling Labs is such a great example of this. They're a social primitives protocol that's working with open hiring on like using blockchain technology to validate people's employment experience and all those sorts of things. And like that is super interesting to see this stuff going in a totally different direction that is not financial, but is still using blockchain technology to bring us to a new place with this stuff. And this is, for me, this is like the really cool part of it, right? That the fact that all of this underlying blockchain technology, it's great if people trade tokens, that's super fun, but like if Jupiter style usages are 80% of a blockchain, like we've definitely failed as a software mission globally, right? Like the point of this stuff is not financialization. The point of this stuff is self-custody and self-sovereignty. And that is way large. Like money and financial security is a really important part of that, but it's only one tiny part of it, right? We got to own our social media. We have to own data better. We have to figure out better data privacy protection systems. We have to be able to have communities governed by the people who actually use them, so we don't get into a Reddit situation. We have to have decentralized social networks, so we don't have this Threads versus Twitter war, right? Like all of these types of things. Like if you are a supporter of antitrust legislation, your best bet is to bet on crypto. Like this software is built in such a fundamentally different way that we can solve a lot of our monopoly and antitrust issues potentially just by supporting blockchain technology. And so for me, this is the really exciting thing of the next year or year and a half, is like to get this technology out of the power users, out of the folks who know how to store their seed phrase on a piece of metal stuck in their wall, right? And actually get people who are using this technology without necessarily knowing what the underlying technology is, or they know a little bit about it, but it's like how we had to train people to sign in with Google, and now like they just get it, right? And so like stuff like Backpack is a huge step in this direction, and all of these sort of new applications launching. This is for me like what the last 4 years has all been about, is to get to a place where the types of applications built on blockchain don't require a master's degree to use.
Yep. And I think amen to that, right? So it definitely shouldn't be so difficult, right, to interact with a blockchain. Meow.
Yeah, I think earlier I mentioned the flywheel. Like like more like when more users come in, more tokens and more market makers come in, it's gonna create a flywheel, right? I think that is something I'm really excited to see happen, right? I think that would really start to see the acceleration of growth of DeFi and NFT. But to cover what Austin was saying, right? I think absolutely right. I think the power of Solana is going to be enabling a whole class of use cases, right? That should be on crypto, social, games, payment, but it's not on crypto currently, right? So I think and for us, I think we are like we work very hard to get to make our developer systems as easy to use as possible, right? So we are currently integrated into probably the majority of protocols, right? And so we want to really make it super duper easy, right? Wherever we can to make all these use cases happen, right? Because we really think that that's actually when Solana shine, right? Beyond Ethereum and beyond Cosmos, beyond anything, right? It's actually when all these use cases come on, and we want to support that, right? Both in terms of hiring the projects, the liquidity layer, everything, right? And lastly is that I think like I think we think as over to on Jupiter, besides the developer supporting developers, we think that there's going to be a huge group of users who either like have not used Solana in a while, right? Or have not even tried crypto yet. That's going to come into Solana, right? And we kind of want to we kind of want to make sure that when they come in, right, they have a good experience, right? And we want to kind of incentivize them to come back as well, right? Really kind of build in the necessary pieces to kind of attract them back. Yeah. And lastly is that I think we are 100% committed to the mission of saying that let's make success irrelevant, right? So we want to work with everybody to kind of like make it such that okay, there's no reason, right? For users to use the sex, right? I mean, I know we are way off, right? But we really want to get there, right? So that is gonna be. So we want to do it, and we want to work with the rest of the ecosystem to do that as well. So that's so those three things are what we want to see. Yeah.
Yeah. And last but not least, Amani.
I'm just looking forward to hanging out on Twitter and building cool stuff, and it's really as simple as that.
It's so cool. So great. So great.
Yeah. I think thank you so much, all three of you. That's unfortunately all the time that we have today. It's been a great conversation. Thank you again, Austin, Miao, and Amani for joining us today. Thank you to the audience for joining us. I'm sure you found it interesting. I certainly did. If you stayed with us to the end, there is a promo code CoinGecko5. If you key in this promo code into our CoinGecko store, you can get a $5 discount off anything that you can find on the store. And with this, we're gonna wrap up this month's meetup. Take care, everybody, and we'll see you during the next meetup next month. So thank you so much, everybody. Thank you.
Thank you so much. Bye.
Thanks.
Thanks.